Good morning, good morning. It is Wednesday. It is Wednesday, and today is a federal holiday, which I'm just realizing that honestly about 15 minutes ago. Decided I figure since it's Juneteenth, it's weird. We're probably gonna have low volatility, but I want to see how price actually moves. We're gonna do a little bit of a study session as well, and would love for you to come along with me. So let's go ahead and get started. Let's pull up. We're gonna be pulling up NQ. That's what we're gonna be trading today, and we're gonna see what the market wants to do. See if it gives us any type of setups. This will be only a eval account day. We will not be doing any funded or live or cash accounts, strictly funded accounts. Okay, strictly funded accounts. So let's see what the market wants to do. We have been pushing higher. We made a new all-time high yesterday, and we made equal highs yesterday, equal all-time highs yesterday. So that's going to be a little bit different. We're going to see if the market wants to push, and we're going to adjust accordingly. Hang on. Let's change the lights. Bam. We got a little bit of volatility here, but let's see. We got 10 handles of volatility. That is small. All right, first thing that I'm looking at here, guys, is I want to see if this wick is going to be, if the consequent encroachment is going to be tested. And here's the consequent encroachment, and it has been tested, as you can see. Look at right here. Here's the consequent encroachment level, and bam, right there. And so it has been tested. That's what I wanted to see. I don't necessarily, it doesn't mean that price doesn't have to go to these wicks right now. My first level was this consequent encroachment. So I wanted to see if price actually hits that consequent encroachment and how does it react. And it reacted favorably to it. We got equal lows right here. That will be our first opportunity. Except we're only looking at literally one handle. So that's not, we're going to avoid that. Yeah, we probably won't be on here a long time today just because we know the environment, and it doesn't make sense to put all your eggs into this basket thinking that you could actually become profitable trading today's. But no, I wasn't here yesterday, so I said I was going to be on Wednesday. Therefore, I want to be a man of my word. Here we are. Here we are. Yesterday had one decent move that I saw that looked really nice. I actually caught a little bit of it. Posted that on X if you wanted to see. A little bit of a market maker sell model and a breaker being executed on. There's also an inversion that I took the entry off the inversion. Let's see here. Not much exposure on that one. All right, so that ran through it right away. Got a 5-minute. And these equal lows are basically 6 handles from this inversion. These equal lows are what I'm talking about right here. All right, let's mark out midnight. Midnight was right around here. This will be, I think, we want to consider this as a potential direction that price wants to run down to this level here. We got some relatively equal lows. We got some liquidity that needs to be, or low resistance liquidity, price that we'll need to run into. And because it is a national holiday today, I really don't expect all-time highs to be hit today. It's probably going to be an inside day. So what I mean by that is if we look at yesterday's high and low, I can expect these highs not to be hit and this low not to be hit. And that's previous day. Previous day low. Previous day high. So I expect price to hang out in here. We can get rid of that. I would like price to come back up and hit this level here, come into this fair value gap. We got a high, low, higher, high right here. This would be an entry right here for a short. That's my most interesting option right now. And then if we look at regular trading hours, oops. Here's regular trading hours. Oh, because it's a holiday, there are no regular trading hours. It's good to know. All right, this is going to be my first entry. I'm going to take I'll take a, make sure my eval is on correctly. We'll take an entry short right here.
Order submitted.
See if we can get up to that. This is our first entry we're looking for right here. We want price to come up and tag this. Come on, we should get it right here. Come on.
Order filled.
All right. Really watching this level right here. That's technically my breaker that I'm watching. Now, volume, let's see. Midnight open is right here. That's 23 handles. We could target that, but 10 handles on a holiday will be fine with me. So 10 handles is sitting right here. So my logic behind this is we have hit the consequent encroachment of the wick that made the all-time highs. We came up into that. We cleared all these levels before then. So a higher time frame PD array. And then we broke lower. We created a market structure shift, and we did a CSID, which is change in state of delivery, as soon as we broke below this level here. So it seems that everything is aligning, but we are on a holiday. So let's see how price reacts here. We are only doing an eval account. This is eval trading only. We are not doing any type of funded accounts or live accounts, cash accounts, none of that. This is strictly demo and eval. And I'm only doing one mini, so the profit will be $200, and I do a 1-to-1 ratio, so that means my loss would be 200, or just under 200, because I only have it at 8.5. We are redelivering from a 5-minute right here. That is a 5-minute filled. But we did close below this candle here that created the high. So that makes this a bearish order block. We just want to see price find that support and then move lower.
Order filled.
Here we are. We took an entry off this breaker here. I took another position as soon as I saw that this wasn't going any higher, and we started turning the other direction at the breaker. I took another position. Doesn't mean that it's a winner. Just means I took another position with the hope that it's going to go down. We'll see what happens. Proper risk should be moved to about there. So from 10 handles to 5 handles for a stop loss. So that still my max loss would only be $200. I think that it could take the Monday's high, but I'm playing based on that we are on a holiday, and because we're on a holiday, that it's not going to make any major moves higher. Earlier I said I think we're going to have an inside day, and so that inside day would look something like this. I thought yesterday that it was going to take those highs out. So here's our previous day high, and here's our previous day low. And so those, I mean, we're in between that. Previous day high, where is that? There it is. So there's previous day high and previous day low. I'm playing that the market is not going to take any highs or lows. that it's going to do more consolidating and it's going to do more up and down choppy price action. So because we hit this level here, and this level is the consequent encroachment of this wick, of the daily wick. So from this low to this high, I think it might be on the 4-hour. This right here, from this high to this low on this candle is what I'm referring to, and the 50% mark is right here. And so I can't remember what time frame I did that on. Okay, I did on the 15-minute. So 15-minute time frame, consequent encroachments right here, which overlaps with this right here almost exactly. And that's the idea that I had going into this, is that price may come up to the 50% but not go break the all-time high, because this is all-time high. The algorithm is, I'm not the algorithm, but it wouldn't make sense to me to break all-time highs when nobody's trading. They want liquidity. So right now, this is more going to be a consolidation day to grab more liquidity so that then they can run it higher and then run it lower. And I'm just trying to get a small piece out of this. So we saw a change in state of delivery. We saw a market structure shift. And we hit a key level to the upside, leaving a breaker behind. And so I'm taking my entry based on what my entry model is. We also have equal lows below us as well. So here's our equal lows. And these equal lows are within the range, which that is what I'm potentially interested in. And price coming back to midnight open, which makes sense for it being a consolidation day. So that's my long answer on my logic. Now, price can do anything it wants on a no news day. Or on a holiday, that is. But this is what we're doing. This is what I felt was right, and that's what we're going to see if price wants to actually run this level here. I would really ideally like to take my position here.
Order submitted.
That's where I would really like my position to go. And so let me put my stops in.
Order submitted.
Now, because it could go to here and not here and leave this for the whole day and grab it at the end of the day. That's the type of day we could be in. And so while I want this to see us go here, if we don't have the momentum, aggressive momentum, and we just go below this here and we start putting around or even potentially reversing, I'll take my position off, because I know that on days like today, extremely low volume, where they just want to chop back and forth to grab, to start building their position. They want to build their positions during these days. And banks aren't even trading. Yeah. I know the 1 minute, 30 second is helpful at times. But you can also look at this as being, you can see this here too. You got a high, you got your low and a higher high. And you could do this off the 1 minute as well. But yes, you are correct. It gives you a little more context when you go to a lower time frame. But this entry and everything else is based off of the 1 minute, because I'm using a 15-minute for my higher time frame confirmation of a specific target to the upside. price is coming back up into this volume imbalance, or excuse me, this fair value gap right here. Let's see if it wants to tag it. We got this order block right here. Come up into it. We also came into the last fair value gap on the downside here. So I really want to see us reject this and close below this again. That tells me we'll run for this low and see how much lower it wants to go. We also have this 5-minute fair value gap here. So we will probably run into some resistance. I think that's inevitable. That's our 5-minute fair value gap that we're watching. We want to see price run through and close below that to target these equal lows. But we have reason to get out. We have reason for resistance. We've respected the consequent encroachment of that 5-minute as well. So I'm gonna AOI is I don't know how to exactly pronounce your name. AOI, to answer your question, you should never trade on holidays. That's the truth. I said I was going to be on here on Monday. I wanted to keep my word. I'm not trading a cash account or a live account. This is only a demo account or an eval that I'm okay with trading two contracts on. Okay? So you should not be putting it would be ill-advised to do anything to try to trade live on a holiday weekend. Because on holiday weekends, anything can happen. Nothing can happen also. And it could chop back and forth and disrespect PD race. And that's the main reason why you don't trade on holidays, is the volume is so low that there's going to be just a lot of disrespecting of PD arrays. For example, while it is respecting this one, it may just come right above it, close above it, and then come back down. Just because it's a holiday, it's sloppy price action. And when there's sloppy price action, we like to stay out of it. We want to stay out of sloppy price action as much as possible, because that's where mistakes are made, emotions get riled up. It's just better to stay and walk away and not be a part of it at all. Juneteenth is a little bit different, I think. I mean, it's a newer holiday. Now, all the banks are closed, so no banks are trading today. That's the thing. So there's no big hitters in the market right now that could cause price to move, or for the algorithm to cause price to move. It's just going to do this. I mean, look, this type of price action, I'm not really interested already in, right? But I'm already in my trade, in my position, and I want to see it hit my target. And if it doesn't hit my target, I'm just going to move my stop to break even to protect myself. Because I would rather break out or hit break even than lose money on the trade. Technically, I'm up $200 right now. I could close it, but I want to see if we actually hit this low. First fair value gap we have to break is this one. I want to see us break that one. And for the 5-minute, we're coming up on 9 o'clock right now, so we should see some animation happening right here. A little bit of volume or some larger candles for at least a minute or so. Let's see what happens. We got 3 minutes till the top of the hour at 10 o'clock. based on even how slow this is, I'm going to move my stop up to or I'm going to move my target up just to 10 handles. Oh, well, technically 10 handles is right here. So where does that put me at? Right there. Yep. All right. Yeah, macro time. Macro time starts. ICT's times are 9:50 to 10:10. That's his first macro for the 10 o'clock hour. I expand mine a little bit. I've started to notice that 440 or the 45 mark, 9:45. I start seeing highs and breakers being formed at the 9:45 time. So I moved it. My macro times are 9:45 to 10:15, and then obviously for 2 o'clock you got 1:45 and 2:15. But you can do the macros out at the top of at every hour. There's a macro. There's a lunch macro. There's an 11 o'clock, 10 o'clock, 1 o'clock. All right, I'm not liking this reaction. Do you see how it's respected the consequent encroachment of this multiple times? And then with that candle, that's not attractive. We're going to take one size off here.
Order filled.
So we're down to one contract. I'm taking one off since I was double sized there, in case price wants to go back up to break even. But right now, this is a free trade, right? This is a free trade. I have my risk off the table. And I'll even cover my commissions. That looks like that would be 11 handles from where my entry's at. We made some equal lows right here. That potentially could be a good sign. In normal conditions, this is a good sign. But what I don't like is where this 30-second, again, closed at the consequent encroachment. I want us to close below this consequent encroachment. We need to close below it. These three candles are showing that it does not want to move lower. We need it to close below it to show us that order flow wants to continue to move lower. All right, so there's our close below. And as you can see, as soon as we close below it, we have some animation happening. It's 9:01. Let's see if price wants to give us a stick in here. I've been learning ICT for a little over a year. I think it's been about 14 months. 14 months of strictly ICT. When I found ICT, I left everything else immediately. Immediately I left. I'm like, this is it. This is exactly, I felt like the Lord was telling me that this is where I need to put my time and energy. And so I've obsessed over it in a way to make sure I can internalize all these concepts. I still have a long ways to go. I mean, considering he's been doing it for 30 years, 1 year, I feel like I'm just barely scratching the surface, but enough to understand and be able to communicate tremendously, and also to be profitable. So there's 1 year's time can do quite a bit. All right, so look what we did. We stabbed below these equal lows, and then we wicked back up. I don't like that at all. This will be my last line of defense. If we close above this fair value gap, or now an inversion fair value gap, if we close above this, I'll close my position. So a close above this will be, I will close my position, because that's a change in order flow as far as up to this wick, and it could go even higher and go into this fair value gap. But I'm already in profit. I want to keep my profit. Playlist. So I don't have mentorship courses quite yet. I will be eventually doing that. All right, so we got 23 seconds. See how we are closing, or we're having some animation. This is what I was afraid of once we only wicked below these equal lows and didn't take this low. So then my eyes went to, okay, what PD array do I want to take my position off at in case it closes above? All right, so it closed right on the consequent encroachment of this inversion. That's good. I like that. That's reassuring to some degree, but it still could go higher. Just one candle is not enough. But let's see what Price wants to do. As far as playlists that I watched on ICT, I watched a majority of his Model 2022 playlist. I've watched all of his 2023, which I was there live for most of the time. And then I went through his core content months 1 through 5. Those will give you, I would start with 1 through 5 on the core content, and then go into 2022 and 2023 for the mentorship. And I personally don't have mentorships. That I plan on doing that. My whole goal in doing these live streams is I feel a calling to help the body of Christ become financially free and independent from employers. So I want to help people be able to do this full time. So we will get to that. But right now, I'm so small as far as a following that I just want to give away content for free. If it gets to the point where people are knocking at my door way too much, then I'll put a paywall up, because I need to protect my time. I want to protect my time and not just be engrossed in everything, in all of this all the time, constantly, because there's so many people. So the way you can reduce the numbers of, let's just say, 500 people are knocking at my door. Well, I don't have time for 500 people. I probably have time for 50 to 100. So there's probably 50 or 100 people that would say, hey, I'm willing to actually pay some money for that. And that's how I would reduce the number so I can protect my time. But right now, I'm happy to answer the questions. When this chat that I'm watching is 500 people throwing in questions, and it's moving so fast that I can't carry a single type of conversation out, that's telling me we're starting to get to the point where it's too many people. All right, so we respected this consequent encroachment, and we pushed lower. See how this tries to scare us? It tried to scare us by moving higher. It wicked up here, rebalanced this whole fair value gap, but closed at the consequent encroachment. And now, quite aggressively, I would say it's moving lower. But see how it just wicked below this one and not this one? This is what I'm not, that's the type of price action that really sucks. There's no reason that it should have stopped right here. It should run for this low. 1, 2, 3, 4 times in a matter of one handle. That's sucky price action. So we're just trying to get 10 handles here, and look at the amount of time that has passed from this entry. Our entry was here at 9:49. So it's been almost 20 minutes. For 10 handles. That's why we don't trade. That's why we don't trade on holiday days. But I did already close a little bit here. I don't know how much I closed in profit. Not very much. All right, so look at that candle there. That candle closed inside this inversion gap, or this fair value gap right here. Let's see if we want to continue to hold it. If we close above it, we may run for these highs. And if we run for these highs, we're probably closing above this. And if we close above that, I'm out. We're still hanging out in this 5 minute. Oh, I'm sorry. That's a 15-minute fair value gap. Ryuk, did I say that right? Ryuk. Well, I'm glad you're here, man. I'm glad you appreciate that. I really do appreciate that. Thanks for watching, and I'm happy to answer and help in any way I can. That's kind of my heart in all of this. Mm-hmm. So we're just straight up in consolidation. This is what these days typically look like. So imagine putting risk on the table right now and being nervous on if it's going to go higher or lower. That feeling that you get when you enter a position, you should not be entering a position in something like this or a day like this at all. So avoiding that emotional drama or in staying out completely preserves your emotional capital for a trade that has a high probability, right? So I already knew that this was a higher probability entry, so I took it. Now price slowly moved in my direction, and as soon as I took off one of my contracts, I'm chilling. I'm not worried. And I already have my rule that if it closes above this on the 30-second time frame, I'm out. So really, I have very low emotional involvement in this. I mean, I really don't care if it wants to go against me or not, because I'm going to get out. Because I know that today is going to be a crappy day. And this is the fair value gap that's going to hold everything down. And if it doesn't hold it down, theoretically, on a regular trading day, it will run at least for this high. This swing high right here. And potentially run for this fair value gap sitting right here, which is where my stop is. So I'm avoiding that altogether. Let's just go to this chart here. That's probably a better visual. All right, so here was the breaker. High, low, higher high. Find your lowest closed, down closed candle. Your entry would be right here. Now, because it was in an order block, a bearish order block, I set my entry at these equal lows right here. And that's why my entry, after I averaged down and got my second position, it brought me a little bit higher. But as you can see, the breaker level was hit twice to the tick and then closed and then moved higher, reaching for this volume imbalance, and then moved away aggressively fairly after that. So that is my model entry in a nutshell. I also do inversions, and that is what this is right here. This, I'm using this as an exit, but this would be used as an entry as well. We grabbed equal lows, we stabbed below it, closed aggressively above it. I mean, aggressively speaking for today, because today's volume is really crappy. And then we starting to push higher, and if we close above this, that would be an entry. So we closed exactly at the level. It's not above it, it's not below it, it's at it. So this is subjective on what I want to do. I'll wait another 30 seconds and see what it wants to do. Because I wouldn't even take a long on a play like this. It's 50-50. Usually I want to see it play up into it or above it, and then I'll take my entry. So if we get a real close above this, that's when I'll close my position. And that would technically be an entry for a long position targeting the swing high. And if you can't see the swing high because of that, this is the swing high I'm referring to. So, glad I didn't close the position as of right now. We still respected it, and we're moving away. Let's see if this candle wants to be a full down closed body candle, or if it's just going to wick lower below these equal lows and then move higher. So we just closed right there in line with these equals. Okay. More than likely I'm gonna exit my position here. That's what it's looking like it's gonna do. Did you guys see the video I put out on a couple days ago? I think it was called I blew my 50K account. It was a 50K account challenge that I did a couple weeks ago. I kind of broke it down. I explained each trade. Did you guys see that video? If you did, what did you think of it? I put a lot of time into it. I mean, I thought it was really entertaining. I'll show the one I'm referring to. Here's the video that I did right there. If you haven't seen it, check out that video. And I would like honest feedback. I'm trying to make these entertaining, but also educational. So I think it's only 7 minutes. It's 7 minutes long, but I really put a lot of time trying to make it entertaining. So it has some fun music. But let me know what you guys think. I'd really appreciate it. Well, we've been respecting that level, as you can see. So we're still in this position. We'll call this the forever position for a 10 handle move. I appreciate it, Al Ryuk. Thank you. So it looks like most of the stream is going to be me in this short position. And that's fine. We're going to see if we actually hit this level or not. And then because we know that it's already a holiday, I'm not going to stay on much longer after that. We'll probably end the stream after this trade is done. So hopefully we get a push lower and we hit our 10 handle win for this trade. It's really what I'd like to see. But we already know price is going to be very slow today. I have a rental property. Would like to see it take London lows. Yeah, me too. Me too, because I'm in a position to go short. We need it to go. We got all this liquidity right here. I'm fairly confident we're gonna hit it. But London lows, where are London lows at? Right around here. These are the London lows. Yeah, I think it could get there. Nathan, the only issue is like how long do you want to be in a trade for on a holiday? I mean, I'm trying just to get 10 handles. And we've been in this trade since 9:50. So we've been in this trade for 30 minutes and I'm only at 5 handles. I mean, reason I trade NQ is because of their volatility. I mean, 10 handles you can get in 5 seconds. So 5, 10, 15 seconds. I mean, it's very easy to get 10 handles. And for 30 minutes, for us being playing out like this, it's not worth going through that long of a trade for such small amounts. It's just better to go out and do something else. Either get away from your computer, go out, spend time with the kids, friends, do outdoor activities, or do studying. Take this time and actually study past price action, not current price action. Because obviously this is the only thing you need to know about this type of price action is that you don't want to trade in any of this. That's what you need to recognize. You need to print this on the image of your mind and tell yourself, if price looks like this, don't trade it. That's what we need to tell ourselves. And that skill alone, that skill right there, I'm serious. This right here is the price of tuition today. This is the cost of what this is worth the cost of being on this stream today, which was free. But if I was to charge something, this would be worth it. Your ability to recognize when not to trade is probably the most valuable thing you can learn. Being able to handle emotionally your emotional intelligence, say, you know what, I want to trade because I want to make money, but this environment is not conducive to high probability outcomes. This just not. And when you can get yourself to recognize, number one, and number two, actually execute on that assessment, you will see profitability. You just have to avoid the lie that says, well, I could get profitable faster if I trade today. That's a lie. That is your drunk monkey sitting on your shoulder telling you that, hey, you could do this. Look at this. You could trade this. I mean, if you're not trading this, how are you learning? How are you going to become profitable? You become profitable by recognizing that these are not days you should trade. Now, this one's obvious because it's in the title of today. Not my video, but the title of what today is. It's a bank holiday. So bank holidays are do not trade. You can demo trade. I'm on here to hang out with you guys mostly. And we're in a demo trade. There's no live money. I'm not in any live money on this. But that ability will take you further than your ability to spot your entry model. Knowing that you should not trade on a day when it's not in the title, if it's just a no news day or whatever it may be. Here's some volatility here. Let's see. So this is there's my trade right there. Let's see if we get a push below this. There, we finally getting some. Let's see if it wants to hit me. Come on. 10 handles? Oh, actually, my 10 handles is right there, I believe. So I might have missed it. Oh, I did miss it. I'm going to close it, guys, because I missed it.
Order filled.
And there's a good chance it's not going to, it could go back up. All right, there it is. A total of, how long was that trade? Oh, wait, I was in there at 45. I was in there way earlier. I got in at 42. So 20, 47, 48 minutes. We were in this trade for almost an hour. Well, we'll take that. That puts us up $250. We're going to log out of these accounts because today is definitely not worth trading. Because there's no way that you could have timed knowing when you were going to get this quick push lower. Where would your entry be on any of this? My only entry that I saw was this breaker. That's the only entry I've seen today. This was going to be my exit, but it didn't close above, which would have been an entry, which would have been an entry for a long, but we didn't even hit that. So we didn't even take out these lows. We created equal lows, which means we're probably going to hit it. But I hit my target. I missed my exit on my target, so I took it off. I'm not going to be greedy. I'm going to take it off and get out with the win. $250. But as you can see, this is definitely a market structure shift right here. Boom. Breaker entry. Let's look at this here. Where these lows are. All right, look where this high is. One thing you need to know about market maker sell models and buy models is this. If it took this amount of time to create this high, you need to see a symmetrical market. You want to see market eventually hit a level back at this level relatively in a symmetrical manner. If it takes approximately this much time to get there, it should take about that much time to get back down to it. Now, shorts tend to go a little bit quicker, so it wouldn't surprise me if it just goes before it. But you want to look for symmetrical markets, okay? Meaning that if it takes this much time to get there, don't expect that price is going to go all the way down right here, straight down, and hit these lows, like that. Or, excuse me. If it's taking this much time to get to this high right here, why would it go all the way to the low right here on this initial run lower? No. That's why we wait for the breaker setup, and then we wait for price to be somewhat symmetrical. Now let's look and see when it actually hits. Let's see if it hits relatively soon. We'll stay on for that and see what happens. Oh, you watched it? Yeah, I did. I did have it pass, but it was more of a fun eval, a 50K account challenge. It was on a no news day, and it was on a no news day, or it was a news day. We had FOMC the following day, or non-farm payroll the following day, and then we had this giant move higher the day before. So I knew it was going to be a consolidation. All right, look at that. Look what we just happened. We made equal lows. There we go. So there's the end of the target of this market maker sell model. Low to high, high to low, and look how symmetrical this is. Okay? It didn't hit exactly this, and that's very common for the down move to be faster than the up move. That's common. But it is symmetrical. It looks and feels symmetrical, don't you agree? So, and I mean, you could even go from the start of the model. I just went from the low. You could go from You could go from that low to that high. Look, it's exactly symmetrical. From the beginning of this move higher to the end of this move lower, it's exactly symmetrical. So see that? That's how you know if it's a market maker sell model or buy model, is it's going to be symmetrical. Now, if this kept consolidating and we're out here, so price comes, up and down, it's doing all this stuff here, and it continues over here. At this point in time, and we don't see this, you got to ask yourself, is this a market maker sell model? Because if we're already out here, it's not symmetrical. So I would start questioning the odds of it actually running for this low, and would probably change my bias and my idea that this could actually go higher. This could actually go higher instead of lower because it's not symmetrical anymore. And so look how pretty. I mean, that's visually appealing. And then now it decides to run. You see that? Look at all that. We had to wait through all of that crap, and then it just drops. There is no entry model. Let's see if it hits your level here, Nathan. It came very close and wicked higher. So that's a symmetrical market for you. That's what we want to see. And actually, I'm going to take a snapshot of that because that was pretty. Yeah, I didn't see any entry. I mean, you could have took this as an entry, but nobody would have taken that. You could have taken this as an entry, but I probably wouldn't have taken that either. Here's the... You could have taken that as an entry. So the lowest fair value gap on the 30-second is right here. The problem is I wouldn't have taken it because we disrespected it right here. So I would not be interested in that anymore. We did close below it, and then we moved. But there was not a good entry. That's why you can't go fill in FOMO about moves like this on news days. All right, my friends. Thanks for joining me. There looks like they want to leave the London lows for later, so that could be an afternoon entry. But my guess is we're probably gonna run back to equilibrium. Equilibrium is from this high to the low. Look where it sits. It sits right and back in all this chop. So it wouldn't surprise me if we come back up here based on this reaction, just to play the game. They're playing the game, my friends. That's what they're doing. So I'm going to be out. We'll be back on tomorrow for a real trading day. It should be a good trading day. I think we have consumer sentiment tomorrow. So we'll be on a little bit before 9:30 New York Standard Time, and we'll be trading. So thanks for joining me. If you haven't checked out that video, do so. The one I dropped in the comments. Let me know your thoughts. I really appreciate it. If it was entertaining and not, I'm trying to make this content good for you guys. So thanks for watching, guys. We'll see you tomorrow. Take care.